Alright, welcome. Thank you guys so much for tuning into today's video. Um, I know I haven't posted a video in a while, but I've been doing a lot more live streams. But today's video is going to be essentially it's going to be a review over the trades that I took this past week. So I took a total of 3 trades this past week, I believe. Yep. 3 trades, and 2 of them being losers, and not, I guess, you don't, a trade isn't ever a losing trade, but it didn't play out how I wished for it to play out, and then there was one that played out. So the first trade that I do want to go over with you guys was on January 14th, 2025. So in this specific model here, my higher time frame coming into today was for us to rebalance this daily inefficiency. So if I take a look at it here, so January 14th, 20, right here. Alright, so the idea for, or I guess the higher time frame, the daily objective coming into January 14th was I wanted to see us rebalance this daily fair value gap here. Because notice how we closed here on this candle, right? We closed above the second candle's low in this specific trade. Or I guess in this, like, the way that we created this fair value gap here. This third candle, we closed above the blue line, meaning that we could treat this, or we should treat this as a fair value gap that gets rebalanced. So once we rebalance this inefficiency here during the London session or Asian session, I'm not too sure, I can no longer use the daily time frame as my higher time frame order flow, right? Because it has already been completed. So because I know that I can't use the daily time frame as my higher time frame order flow or objective, I have to go onto the intraday time frames, such as the 4-hour, the 6-hour, the 8-hour, the 10-hour, or the 12-hour, right? As an, I guess you replace the daily time frame with the 4-hour time frame, or etc. So the specific trade that I took here today was based on how we closed here on this 4-hour candle and this 8-hour candle, right? Both, just to make it a little bit closer, if you guys can follow my mouse, this is the 4-hour candle, right, that we created during the morning session, and this 8-hour candle as well. So both of those candles here are suggesting that we're most likely going to take out that 4-hour low and the 8-hour low, right? So my objective coming into that specific that morning was for us to take out the 8-hour low and the 4-hour low, and that's my higher time frame objective. My model here is based on this hourly candle. So this hourly candle right here is suggesting that we're going to take out this 1-hour low. After we take out that 1-hour low, we should continue to expand lower towards the 4-hour and 8-hour low. So in the next slide, you'll see how the 4-hour low and the 1-hour low is a little bit different, right? So here, this is the hourly low. So that thick black line right there is the hourly low. However, the hourly low is actually the same low as the 15-minute low. And this allows me to scope into the 15-minute time frame as my model, instead of basing my model here on the hourly time frame. And essentially what that means is that instead of us completing the objective within the next hour, we should complete the objective within the next 15-minute, right? Because the 15-minute time frame here, the 15-minute candle, is also suggesting us that we should continue lower in that point in time, right? And referring to how I said that the hourly low and the 4-hour low is 2 separate lows, the idea for this trade is that we should expand lower, continue to go lower after taking out that hourly low to attack the 4-hour low, right? So here, my entry pattern here ends up being on the 1 minute time frame. So we once we opened up here at 10 a.m., right? We create this. This is the candle that I take my entry off of. Not actually this candle, but the candle right after this candle. So the 10:02 candle is when I took my entry, right? Because the way that we close here on 10:01, this candle closed within this 1 minute fair value gap. I didn't really highlight it for you guys, but there is a fair value gap with right here. There's a gap, and because that 10:01 candle closed above the fair value gaps, the second fair value gaps candle's low, which is this low right here. Oh, whoops. Which is that low right there. I could use this fair value gap as an entry pattern, and then I took my entry there, and I ended up getting stopped out. But this, like I said, this model here, everything that I'm looking for was presented, right? I was presented with a higher time frame objective, I was presented with a model, and I was presented with an entry pattern. Is there anything else I missed here? In order for me to take this trade, I would have to find a model. Yeah. And like I said, the idea of scoping, right? 1 hour, the 15-minute low ended up being the same low as the hourly low, which means that we could end up, instead of using the hourly model, we use the 15-minute model, because the 15-minute time frame, the low of that 15-minute candle is the same low as the hourly. So we should complete the objective, I guess the hourly objective and the 15-minute objective within the next 15 minutes. This trade is called the expansion model. Like I said before, we should continue to expand lower to attack the 4-hour low after taking out that 15-minute low. And yeah, everything here checked out. It's not a losing trade. I guess it's a learning trade. I mean, there was nothing else I could have done better here. My strategy presented itself. It just didn't, I guess, play out in my favor. But yeah, that was the first trade of this week. The second one was actually in the same day. So January 14, 2025, and I believe this was this was a little bit after that initial run. So I do want to show you guys that we did end up completing that 4-hour objective, right? So after I got stopped out here, we actually reversed here. So we ended up taking out that 15-minute, or we didn't actually end up taking out that 15-minute high. We, I think we had SMT here between NQ and ES, and the 4-hour objective ended up getting completed, right? Right here. So this is that 4-hour higher time frame order flow that I was talking to you guys about, that first trade. That its objective has now been completed, right? As I was anticipating. It's just, like I said, I got stopped out. That's completely fine. So now now that the 4-hour objective and the 8-hour objective has been completed, I can't rely on those two time frames anymore for a higher time frame or I guess a higher time frame order flow, right? So I cannot use the daily, I cannot use the 4-hour or the 8-hour. And the 6-hour time frame here, we are going to close on this candle in about like an hour, about where we're at right now. So I can't use the 6 hours as well. So in the second trade that day, I actually based my model here, or I had my higher time frame order flow on the 30-minute time frame. So here you guys are going to start to realize that, hey, this higher time frame thing that he's talking about is fractal, right? You can apply that same concept, that same theory on every single time frame, because every single candle has an objective, right? This 15-minute candle's objective was for us to take out that 15-minute low. That, like I said before, this 4-hour objective was for us to take out that 4-hour low. And there will be those things that present itself like all the time, right? And so the higher time frame order flow, I guess, for this, the second trade here, is based on the 30-minute, and the 30-minute time frame is telling me that. So this is the 30-minute candle that I want you guys to pay attention to here. This 30-minute candle is telling me that we're most likely going to take out this 30-minute candle's low, right? And notice how we create this 30-minute fair value gap. The way that we created this 30-minute fair value gap indicates to me that because we closed below the second fair value gap's candle's low right here, it's kind of, the wick is kind of small, but it's there, that's the low. Because we closed below that candle, or I guess below that low, we should take out the third candle's low first. And you guys can rewind that. So let me say it again. Because we closed below the second fair value gap's candle's low, we should take out the third candle's low before we take out the third candle's high. So we shouldn't rebalance this inefficiency. This fair value gap should be treated as a breakaway gap. So it's an objective way of seeing when a fair value gap should be rebalanced and when it should not be rebalanced, right? So in my mind now, I'm anticipating, okay, because we created that fair value gap the way it did, I'm going to target the 30-minute low as my higher time frame objective, right? In my model here, my model is based on the 15-minute time frame. And this 15-minute candle here, the really bearish looking one, I am anticipating for that 15-minute objective to be the 15-minute low. So now I'm aligning myself with the 30-minute order flow on the 15-minute time frame. So the 15-minute time frame ends up being my model, and my entry patterns on this 1 minute fair value gap. So as you guys can see, this is the fair value gap right here. I should indicate this so it's visibly, like, I guess it's visible for you guys to see. But once we retrace back inside this fair value gap here, I take my entry, and this is a 15-minute candle that I'm basing my model on here. That 15-minute low ends up being my low-hanging fruit. So we take out the 15-minute low, and this is another example of an expansion model, right? We should be expanding, continue to go lower after the 15-minute low to attack the 30-minute low. Notice how those two lows are separate. So this right here, very, very like ideal. I mean, you align. I mean, all of these trades were everything. All of those trades, I guess, this week were, like I said, my requirements got met, and I just took the trade. I just pressed the button. That's all I did. And this slide here is just to show you guys that there's another, I guess, technique for seeing targets. So it's called standard deviation. I haven't really gone over it with the live stream too often, or I guess too much. But the whole idea is that there is a dealing range, I guess. But from this swing low right here that we created to this swing high, it's basically the retracement into that 1 minute fair value gap to continue lower. That little retractment, we can use its standard deviation. So I projected the length of that retracement downwards because that's the direction of the market as of right now. And notice how the negative 0.5 and the negative 1 standard deviation is in alignment with that projection, right? That just means that gives me more confluence that the 15-minute low and the 30-minute low is going to be taken, right? And there are some characteristics of standard deviations as well. The negative 2 to negative 2.5 tends to be where prices likes to have a little retracement or reversal, and the negative 4 standard deviation is where prices tends to reverse as well. So here you guys can see that being active. That negative 2, negative 2.5, we kind of stall here once we reach that area, and then we continue to hit this fair value gap a couple more times and then continue lower. And then if you guys go back to January 14th, you will see that this -4 standard deviations ends up being the low of the day here. And this was like ideal, very, very ideal trade here. Like I said, higher time frame, there's a higher time frame order flow, there's my model, and there's an entry pattern. Everything here got checked off, and I just simply just clicked the button. And last but not least, the third trade here coming into, or last week, was on Friday, and my daily objective coming into today, or I guess coming into that Friday, was for us to rebalance this inefficiency, right? So notice how, like I said before, the way that we created this fair value gap, the third candle's closing price is below the second candle's high, and in this specific, like, this is a BISI, buy side imbalance, sell side inefficiency, and the way that we created this BISI tells me, or is suggesting to me, that we're most likely going to rebalance this inefficiency. So I had in mind that we're most likely going to rebalance this inefficiency. However, this is a case where that idea doesn't play out, right? However, coming into the Asian and London session, we disregard that previous day low and we expanded towards previous day high. So now we completely just, I guess, disregarded the daily objective, and we ended up taking out previous day high. So I can no longer use the daily time frame as my higher time frame order flow, right? It's been completely disregarded. My anticipation for the daily time frame didn't follow through, and it just did the complete opposite. So I can't use the daily time frame anymore, right? So now I have to rely on the 4 hour, 6 hour, 8 hour, etc. time frames for my intraday bias. So I waited until 10 a.m. and I saw this a 4 hour candle get created, and this you guys can't see, but the 8 hour candle also closed rather bullishly. So my objective coming into the morning was I wanted to see higher prices if we could respect this hourly fair value gap. So higher time frame objective is for I guess in that specific morning was to see higher prices. However, yeah, that's all. No, cái giờ cái này làm 11:15. Yes. Let me close the door. So, but when I went onto the lower time frames relative to the 4 hour, I noticed this hourly candle, right? This hourly candle right here that we created isn't exactly bullish. The way that we created this hourly fair value gap, like I've been stating again and again in this video, the concept of rebalancing and not rebalancing. The way that we created this hourly candle, or I guess hourly fair value gap, suggests to me that we're going to rebalance this inefficiency, right? We should trade into this fair value gap to possibly continue higher. But I don't care if we're going to respect this fair value gap or disrespect this fair value gap. My idea is that we're going to rebalance this inefficiency. It doesn't matter for me if we disrespect it or not. What I do know, or what I'm anticipating, it's higher probable that I can anticipate that we at least retrace or rebalance into that inefficiency. So now I'm thinking, wait, the 4 hour order flow is telling us that we could possibly continue higher, but the hourly time frame, that specific time, right, is telling me that, hey, we're going to continue lower to rebalance in an inefficiency. So I can no longer use the 4 hour time frame. Or it's not that I can't use that 4 hour time frame, I just can't use it in this specific time, in like right now, right? because right now the hourly time frame is telling me that we should continue lower within this next hour, but within the next 4 hours we could see higher prices, if that makes sense. um, so here I'm shooting for a short-term objective. I'm not really shooting for a long-term objective, that if that makes sense. So my higher time frame order flow, or yeah, for this specific trade is based on the hourly candle or hourly order flow. So for me to be a part of this trade, I took my model here based on the 15-minute candle. So the 15-minute low ends up being the same low as the hourly low. So what does that mean? The idea of scoping again, right? That means that we should complete the hourly objective within the next 15 minutes, because the 15-minute low is the same low as the hourly low. So now I have found my higher time frame order flow, or I not found, but I'm able to identify the higher time frame order flow, and I'm able to identify what my model is. The only thing that's missing now is my entry pattern. So my entry pattern here, this 1 minute fair value gap, and here this one I actually highlight for you guys. So once we rebalance or we trade into this 1 minute fair value gap, I take my entry, and yeah, I mean that's now it's up to prices to either play out or not play out. And in this case, it didn't play out, which is completely fine, right? I literally, if I didn't take this trade, I would have been mad. Not mad, but I would have been more frustrated because I didn't take this trade. But I mean, I took this trade. Everything told me that I should, and I did it. So that's completely fine as well. But however, one thing that I do want to go over here is that this in that specific day, we actually, if you guys can see it here, we actually retraced within. So there is a swing high, or I guess a swing low here, and there's a swing high, right? Swing low, swing high. Within that swing low and swing high, there's a dealing range. So let's draw up the dealing range, and look what we did already. So notice how that bearish hourly candle has already closed. We retraced back inside this hourly dealing range's discount level already, which is something that I did not notice during this specific trade, right? We already, retraced into the discount of this dealing range. So now I'm thinking like in the way that we did it too, it's not like super bearish, right? We just dipped into it, so we could end up continuing higher because we retrace back into discount. And the whole idea is that buyers want to be buyers in discount. Like, think about it. Whenever you enter a store and you see all these advertisements about, this brand's sales, there's a 50% off sale. You want to be buying when prices are low, right? When it's cheap. Apply that same concept to the markets as well. The algorithm is going to want to be buying when prices are considered in discount, and they want to be sellers when prices are considered in premium. But in this specific trade here, if they're going to be a buyer, they're going to be a buyer below that 0.5, and that's something that I didn't recognize whenever I was, analyzing this model. And if you guys watch the live stream, you guys can see that I literally broke this, I was doing my pros and cons here, and I immediately I finished the pros and cons at 9:59. And whenever I switched over to TradingView and I saw this model present itself, I literally had 30 seconds or so to execute, and it was rather hectic. It was very frantic. But I'm not blaming the outcome of that trade because I had no time. It's just whenever I reviewed it, it's just something that I saw, and I did notice this as well. So what do we do? The way that we created this 15-minute fair value gap. This closing price here, the third candle's closing price, is above the second candle's low, and based on my theory, right? What is this fair value gap going to do? We could possibly rebalance this inefficiency, but I was willing to take the risk that even though that we closed above that red line, the blue line's above the red line, even though that we closed like that, I was anticipating, okay, maybe we could just treat this, because sometimes it does happen where we end up just leaving it as a breakaway gap, even though we created it like this. But that was my risk, and we ended up trading into that 15-minute fair value gap, and then we took out the low. So you guys can see here, this was that hourly low, and we ended up taking it at 10:15. So the objective did end up getting completed. It's just within the time frame that I took it, it just didn't play out, which is completely fine. Like I said, when I took the specific trade, everything met, right? I had a higher time frame order flow, I had a model, and I had an entry pattern. Everything checked off. All I had to do, press the button. And with that, I mean, I've gone over pretty much everything already. Just some key things to keep in mind is that if you are going to start viewing prices in the way that I do, like I said, follow your rules. There's nothing wrong with you taking a, I guess, monetary loss. It's you to be able to actually carry out those rules and that strategy. That's going to make you a disciplined human in general, right? There's nothing wrong with taking a monetary loss, because that's something that you can get back. There's nothing wrong with that. Something that you can't get back is that opportunity that presented itself, and you decided not to take it because of fear, because of I'm afraid of the outcome or whatever. As long as you're able to press the button when all of the requirements got met, you're completely fine. And it's kind of like a psychological shift for me too. Back then, I used to see it in the bad perspective, but now it's kind of like, hey, my model presented itself. Why didn't I take the model now? You know. Another thing to keep out for is standard deviation as well. Maybe try to implement that into your strategy. Over this next week, I'll try to see if I can show more examples of standard deviations. But we'll see. If it presents itself, then it presents itself. I'm not going to force anything. And that's going to be all for today's video. It's rather long. But... Okay. Bye, Dove. Alright, and thank you guys so much for watching today's video. Until next time, be safe.